Welcome to Alternative Investments Chat,
where we demystify the world of alternative investments and financing for entrepreneurs and investors alike.
With these discussions, we hope you're more empowered to unlock opportunities in your business or portfolio. I'm Erin.
And I'm Erica. Let's get started.
Hello, I'm Erin, and I'm here with my co-host, as always, Erica. Today, we're going to be talking about investing in farmland. Now, when I think about farmland, I think about a lot of hard work that I don't want to do.
I think of a cowboy hat and ugly boots and dirt in places that dirt shouldn't be.
Yeah, smelly.
And going and farm animals.
Yeah.
And do we have to record this episode? I'm already over it.
Yeah, you're over it. Well, what if I told you that you can actually invest in farmland without ever stepping foot on a farm?
Now that sounds nice. So farmland can be attractive investment for a lot of reasons. Mm-hmm. In fact, agriculture has been the asset class that has historically delivered very high returns. So stay tuned as we cover all of those for you now.
Yeah. So one thing is for sure, everybody's got to eat, right? And our food has to be grown somewhere to then come to us.
Right.
Unless you're eating, like just a bunch of red 40. But, if you're eating
now, Erin, let's not get into that controversy.
If you're eating like fruits and vegetables and all those things, like things have to be grown. And this is what makes investing in farmland an attractive investment, because there is this constant demand for agricultural products. Mm-hmm. But how do you invest in farmland anyways?
I don't know.
There's tons of ways to invest, but we'll just cover a few examples here in this podcast.
Okay.
First off is direct ownership, which is exactly what it sounds like. You directly own the farmland. Investors buy the land and they directly manage it. So they have their hands in the pot.
All the stuff that we just discussed that we don't want to do. So
Right.
I won't be investing this way.
Still an option, but definitely is a more hands-on approach.
Okay.
As you can imagine, it requires a lot of upfront capital because you have to be able to purchase the land. You have to be able to purchase the equipment that is required to actually farm the land. Have to be able to purchase all of the crops that you're going to grow and or animals, livestock that you're going to have. Also, I would recommend requires an expertise in land management, maybe some prior knowledge on farming and agriculture, so that you're not just jumping headfirst into something you don't have any prior experience on.
Yeah, I hope you don't kill your crops. Like I can't even keep a cactus alive, and we live in Arizona. Don't ask.
Right.
But I've killed two.
Right. So that keeps a lot of people out of that particular option. Mm-hmm. Another option is farmland RIETs. You've heard us talk about RIETs on this pod before. This allows investors to buy shares in a portfolio of farmland properties. RIETs are typically purchase farmland and then lease it to farmers, which I think that's at least that was something that to me is like makes sense, but maybe not off the top of your head. You might not think like, oh, farmers are renting the land.
Right. I would never have thought that.
Right. However, these are publicly traded, which helps offer more liquidity compared to like stocks and stuff. It's very similar. REITs can focus on a variety of different sectors when it comes to farmland and or agriculture. This can include row crops, orchards, or vineyards. This kind of investment requires less upfront capital, and the investor doesn't have to worry about the hands-on management.
Nice. I wouldn't mind owning a little piece of a vineyard here or there.
Right. It's kind of cool.
Yeah.
So how about you tell us about some other investment options?
With pleasure. So there are also farmland mutual funds. So these funds pull money from investors to buy shares of agricultural businesses or farmland REITs. Again, we talked about they take all the money and then they kind of put it off in little spots. They can focus on specific crops, regions, or agricultural technology in, instruments or investments for that matter. So something to note is that some of the mutual funds that include farmland are not exclusive to just agricultural investments. They might actually pull into those other asset classes. Like I just said, they pull that money and they kind of put it out there. So if you're interested in agricultural investments only, please make sure to read the fine print. Look very closely to ensure you get all the details of that investment, because you could be doing a little bit, not all farmland. It could be spread across other asset classes. You can do what our favorite, crowdfunding platforms. So crowdfunding platforms that offer fractional ownership in farmland have become a lot more popular. This is not just in this asset class. This is in almost every single asset class that we chat about. So get used to hearing that, listeners. You're going to hear us say it a lot.
Across the board.
Across the board. Examples include Farm Together and Acre Trader, which both of those names just killed me when we were doing the research. I was laughing so hard. I'm like, why do these? I understand they're investment sites, but they 100% sound like weird dating sites out there. You know, I'm like, let's farm together. Exactly.
Farmers only.
Oh my gosh. Just a picture of an ear of corn, all scantily clad. Oh gosh. Okay. Well, won't dive down that rabbit hole. Okay. But these sites do allow investors to pull together money with others to invest in farmland. So it makes it nice. So we're going to kind of just chat about Farm Together for a second to get a deeper understanding of how these platforms work.
Totally.
So when you go to their website, which I did, you can browse current opportunities. You'll be able to view details about the property and what kind of crops they grow there. And a nice little fun fact, the most common types of U.S. crops are corn, soybeans, and wheat. If you're wanting to invest in something more specific, like almonds, walnuts, citrus, grapes for wine, the upfront cost is typically higher, but the returns may also be higher as well. Again, higher risk, higher returns, right? Once you pick that property you're interested in, you'll then submit your payment via that website, and then you can keep track of your investment online. There's no trips to the farm required, so you don't need to go out there and see all the animals and the equipment and get dirt everywhere. And then a lot of the distributions are typically paid on a quarterly or annual basis. Again, they just kind of put that money right in your account, makes it nice and easy. You're giving some food to anyone who's ordering it or buying it or wherever we export it to, but then you just get your paycheck.
Yeah, it's pretty cool. Well, sounds like there's a lot of different opportunities to get involved. But let's talk a little bit about market trends, past, present, and future.
Okay.
We'll kick off with the past. We'll go in chronological order.
Makes sense.
Imagine if I was like, let's start with the future. Okay, so historically, farmland has been viewed primarily as a long-term, stable investment. Land was often purchased for generational wealth building with investors who viewed it as a safe investment, and it's obviously a tangible asset with hopes that it will appreciate over time. Lease arrangements were common, which we mentioned a little bit earlier in this episode. Landowners would earn cash through payments or profit-sharing agreements, depending on what sort of contract they would draw up, which gave the landowners a steady income stream, very attractive. And that allowed them to maintain that income without having their direct involvement in the farm. Farmland investments were largely restricted to those high net worth individuals, which is common for almost any investment like this. Again, requires a lot of upfront capital, so difficult for a typical investor to break in. Those retail investors didn't have access to farmland unless they had that capital to purchase the land outright, which again, just not very common.
Got it.
And the focus of farmland investments in the past was typically on row crops, which are going to be those crops that you just mentioned, corn, wheat, soybeans. These crops have a well-established market. They're utilized for a lot of different products, very high demand. And they have consistent farming processes that are, I said processes like a British person. That's interesting.
I like it.
Okay.
Should we finish the rest of the episode in accents? We could. I might break character, but
yeah, I don't think I'm gonna do that. I think I'll save that for another day. But anyways, having those standardized processes, there we go, would make them a safer bet for traditional investors.
Wonderful. So that takes us to the present. Right meow. So it appears that after years of growth, farmland prices are stabilizing finally. We talked about corn one time in a different episode about how drastic it went from up to down, up to down, up to down. So they're finally like leveling out. So while this might be good news for current investors, those just coming to the scene, but for those looking to get involved now, entry prices seem to be dipping slightly, making it more accessible to new investors. But again, if you bought in when it was a little bit higher, that kind of stinks, but it's all right. This is an asset class that's never going away. So just stick with it.
Yeah, it doesn't necessarily mean that it's a bad investment just because it's dipping a bit.
Yeah.
for those who have already invested.
I agree. Partly due to government payments, net farm income is expected to increase this year as well. So after government support for farmers fell off post-pandemic, average farm income had declined in those recent years. But the government is now putting payments towards the farmland once again. And it says like the USDA predicts a nearly 30% increase.
That's big.
It is. We've got technology-driven agriculture too, ag tech. There we go, not tag. New inventions like precision farming drones, AI-driven analytics, and machine learning have the potential to amplify farming efficiency and profitability. Again, a machine can work a little bit longer than a horse or a human, and especially if it's driven by AI or if it's a drone. It might be able to get the work done quicker. I think that's really cool. Doesn't necessarily mean it's better, but I think it's really neat.
Could make it more efficient.
Yeah. And then, of course, we have my favorite, sustainability and ESG focus. So increased focus on regenerative agriculture, organic farming, and environmentally responsible practices. Farmland that incorporates these practices can be seen as more resilient to climate risks. So those are really great.
Yeah, very interesting. So now that brings us to the future. One of the predictions is that climate resilient farming will continue to grow in popularity. Makes sense, right? Investor demand will likely to continue to rise and shift towards investment opportunities that are seen as green or environmentally friendly. We know that the demand's there. It makes sense that that would only continue to rise. Also, there's a prediction that permanent and specialty crops will become more common. These kinds of crops offer higher returns, as we discussed, which can make them more attractive to investors. These permanent crops, which, when I first heard that, I was like, what's a permanent crop? Orchards, vineyards. Think about like trees that are planted that stay there all year long. They, you don't hack a tree down. They stay there and they bear their fruits, and then you take the fruits during the season. They take longer to mature, of course, than like a soybean or whatever, but the returns are often higher. And specialty crops like organic produce is in demand. We know that the demand for organic produce has risen drastically over the years. So there's another thing there, and that's considered a specialty crop as well.
Interesting. I wouldn't have thought of that.
Yeah, there's just, specific practices that they have to do, and because of that, not only is the produce more expensive, like when you buy it at the store, it's more costly for the farmers to actually grow it that way.
Makes sense.
Another thing which is interesting is global farmland investments. So potentially investors could be looking beyond the US to invest in farmland in other countries. Emerging markets like Latin America, Africa, and Southeast Asia, they of course have their own crops that are common to those lands, native to those lands. So it'd be interesting to get involved in agriculture overseas.
That's awesome.
Also, urban farming.
When I saw this when we were reading through our research and our scripts, I was like, this spoke to me. So tell us about it. I love it.
So we know that urbanization is happening. There's less and less land that's actually available for people to farm. Global population is on the rise, so we're having to develop more land for housing. Because of that, there has been an increase interest in urban farming, where investors might look at utilizing unused land to farm in more unexpected places. So on rooftops, vertical farming, hydroponics, or community gardens. When I was reading this, I actually had the pleasure of visiting the Heart and Soil People's Garden, which is in Phoenix. And they are a community garden. They're actually located in what is considered one of Phoenix's food deserts, which means that they have limited access to full-size grocery stores or any place to get fresh food. So the nonprofit actually helps people grow their own food in the community garden and teaches people how to provide for themselves, how to beekeep even. There's entrepreneurial classes. There's all sorts of things.
That's so cool.
It's really cool. But when I went to visit, it was like summertime.
Yeah.
That when I went, and there's like Swiss chard that's like this high. There's cabbage, there's cauliflower. I mean, it's like a full garden.
Yeah.
And, a lot of times we think about Arizona as like nothing grows here.
Yeah.
But it's pretty cool to see how these people are able to grow their own food.
Awesome.
So I think that we'll see more and more of that.
It reminds me of Agritopia out there in Gilbert.
Sure, yeah.
And that area is booming because a lot of the restaurants are utilizing the natural produce that Joe is actually farming out there. If you go out there, it's like a restaurant, and then there's like a huge field, and then there's houses, and it's so awesome. I'm like, I really like being able to see that. Also, when we talk about urbanization, I think of gardening, the little community gardens.
Yeah.
That are really cool. So everyone helps attend to them, even though you have your own rows and stuff. But it always makes me happy to see some of that. Because, we're living in, as Jay-Z said, a concrete jungle. And so, the land is, there's so much less of it. And it's
Right.
very worrisome because it's like you said, how are we supposed to eat healthy?
Yeah. But
We
if
have
we
nothing
get
to grow.
creative, there's definitely ways that we can still do that.
Yep.
So now it is our favorite part, to talk about risks.
Yep.
So let's get into that.
Go ahead. You start it off.
So first off is market and commodity price risks. The price of agricultural products and crops and livestock can be volatile. You see that reflected in the grocery store when you go shopping. We know that that's a big topic of conversation right now. So, firsthand, like that affects even just consumers. Crop prices are heavily influenced by global supply and demand, weather patterns, geopolitical events, and market speculation. A drop in commodity prices can really hurt farmland profitability. If all of a sudden an apple was, $1 a piece and now it's, 50 cents a piece, you're missing out on 50% of your profits.
Yeah.
There's also weather and climate risk. Obviously everything is grown outdoors, and that is reliant on the weather and weather patterns. So unpredictable weather such as droughts, floods, storms, and extreme temperatures can damage crops and reduce the actual yield for that season. This is especially risky for row crops that rely on specific weather conditions for optimal growth.
They don't get exactly what they need. They're a little temperamental.
Yeah, they're upset.
Yeah,
And I don't blame them.
Yeah. Me too. Don't worry.
Long-term climate changes may also affect farming regions just in general. Some areas may experience shifts in growing seasons and have to adapt to that. Water availability and the types of crops that could actually be grown in that area may change depending on the climate.
Yeah.
These changes can create longer-term uncertainty about crop production, and it might take farmers a little bit of time to catch up and be able to, recoup depending on the patterns that persist.
Yeah.
What are some other risks?
So we have soil degradation and land productivity.
Yeah.
Again, farmland investment can be impacted by issues like soil depletion and erosion, especially if proper soil management practices are not followed. If you are abusing it, it's not going to produce for you the way you want it to.
Right.
Over time, we've seen that poor soil health can reduce crop yields and overall productivity of that land, affecting both current and future returns. Again, I grew up I come from New Mexico, which is an agricultural state. In fact, I went to New Mexico State University. We are Aggies. We are not Texas A&M Aggies. We know how to do math. But
Shade.
Yes, very much so. It was always our joke. But, we have a lot of agricultural classes and things to do. So even though that was not my forte, we still got to take those classes and see it. But you have to rotate the land because you can really mess it up, and then you might not ever see a crop on it again.
Right.
So some land may require substantial investment in land rehabilitation or improvements to bring it up to optimal production level, which can, again, increase the cost. Because if you can't plant something on a big patch of land, you're losing money, and especially if you're rotating those out properly, or if you have one that needs a little bit of help, it needs to go to rehab. then you can't grow anything on it and you lose money.
Right.
There's also those operational and managerial risk or management risks. So we have tenant risks. You talked about leasing. Yeah, we always think tenants are in a building.
Sure.
But farmland investment relies on tenant or farmers that lease the land. And if a tenant fails to farm properly, goes bankrupt, or doesn't honor lease agreements, it could really impact the profitability of the investment.
Right.
Again, bad tenant can really mess things up, right? They can default, which can lead to legal disputes, time in court, costly and time-consuming research even just to get new tenants or farmers to utilize that land.
Right.
Farm management challenges, so poor farm management practices or ineffective use of technology can result in inefficiencies, missed revenue opportunities, and lower crop yields. Again, if you're not using the right equipment, it can really mess things up.
Right.
And so investors who are not directly in farm operations, unfortunately, this is where you have no control because you're not going down there and saying, hey, we need to replace this. Hey, why is this going like that?
Yeah,
so
you're reliant on somebody else.
Yeah. So those are just a few of the risks involved. As always, it's very important to perform your due diligence, do your research before getting involved with any investment.
Yeah, absolutely. You're totally right on that. And you can also help mitigate some of these risks by taking precautions to protect your own portfolio. As always, it's suggested to make sure that your portfolio is properly diversified. This is how you can help, hedge against risks and protect yourself. When it comes to farmland specific diversification, you may want to invest in a mix of locations or different farms that specialize in different crops. So that's one way to diversify within this asset class itself. As always, we suggest speaking to a financial advisor before making any sort of investment. You want to make sure that you're making the best choices that you possibly can with your money. So that's always our suggestion.
Always, always. Well, that is just about it for today, everybody. We hope that today you've learned how farmland investing is evolving.
Yeah.
There's new ways to invest to gain exposure beyond direct ownership. Again, don't get your boots dirty. Just get
You don't have to.
No.
If you want to, cool. But
so if you think farmland is for you, again, there's plenty of ways. Just make sure you seek professional help.
Yeah.
We will see you next time.
Thanks for joining us. Stay tuned for more insight on our next episode.
And don't forget to subscribe to continue the Alternative Investments chat. See you next time.
Content provided in this podcast is for informational purposes only and should not be construed as professional, financial, or investment advice. This podcast should not be construed as an offer to sell or a solicitation of any offer to buy any securities. We strongly recommend that you seek advice from a qualified professional before making any financial decisions.